Hi everyone, it's Marissa here, and today I'm joined by Pasha, who is the principal lawyer at Credit Repair Solicitors. We are talking about credit reporting today and credit scoring. So these days, as time goes on, the banks have more and more access to more and more information about your personal situation and your personal life. And what a lot of people don't realise is how much information the banks can actually access about them through credit reporting. So we thought it would be useful to bring Pasha in, who's an expert in this area, to talk all about credit reporting and credit scoring so that you understand what the banks actually can have access to in regards to your personal information, and you also understand what are some of the things that you can do to find out more about your particular credit reporting and your particular credit score. So welcome, Pasha. Thanks for joining us today.
Thank you. Pleasure to be here.
Can we just start by just giving an overview of what actually is credit reporting and what is a credit score? Because let's just give a bit
Overall
of a definition.
synopsis. Okay, so a credit report is, think of liken it to like a blood report from a doctor that tells you the health status of you objectively speaking, and it is then used to determine if you are going to be a riskier borrower or your credit worthiness. And your credit score is also an indication of that. But a credit score is one factor that's made up of many different items.
I like that, analogy that you've made. Where so a credit report is basically like you would go for a blood test with your doctor, where you get scored on all these different factors. A credit report is basically your health report, but for your financial health.
That's one way of thinking
rather
about it.
Rather than your physical health. So with the credit score being just an actual number made up of everything that person has done in their life.
That's pretty much right. So there is a variety of websites out there that people can access their information, and like everything else on the internet, you've got to make sure you go to the right place to source the right information.
Yep.
So there's, like, for example, third-party websites out there which we do not recommend for you to utilize per se, because it will show you a synopsis of your credit score, but it's like looking at your report through binoculars, if you will, right? And then you've got the free credit reports that Australians can now get for free 3 times a year. They're better, but they're not ideal because they're not the ones that the banks and lenders use. So if you're trying to get finance, it's important to use what's called a comprehensive credit report. Now that has all your information under the sun from the credit bureaus on there, and it is the one that the lenders use. So that's where you'd stick with if you're trying to get a loan. You look at your comprehensive credit report to begin with.
And that is something that we're able to help people with for free, actually, at Rise High. If you want to get a copy of your comprehensive credit report to actually see where that sits. But how important is it for people to understand their comprehensive credit report? Because a lot of people wouldn't even know what it contains or how to read it. So what is the level of importance of people to sort of actually see a copy of their credit report and understand what it means?
So from a point of view of, if your goal is to attain some kind of finance, whether you're trying to buy something, consolidate loans or refinance, it's very crucial to be able to look at that. But at the same time, just like you'd keep up with your health, it's important to at least look at your report once every 6 months, in my opinion, to make sure that your credit is in good standing. Now, credit score is generally between a figure of 0 to 1200. 12, and the more you're over towards the 1200, you consider credit score is considered excellent, which opens you up to a variety of lenders at a better interest rate.
And in your experience, Pasha, what would you say is a really healthy credit score? Because that's a question that we actually get often. In fact, we got a question through specifically for this Facebook Live around what is a good credit score. Do you have a magic number in your mind as to what a good score is and what a bad score is?
Okay, I guess thinking just any score above 750 is considered an excellent credit score.
Okay. So 750 to 1200 is
correct. Yeah.
Excellent.
Where you want to be ideally. Now, obviously, each lender's got their own policies, and that's why they're going to speak to professionals like yourselves at Rise High to be able to know what the lender's requirements are. But a poor credit score, if you would be in the red, is anything pretty much below 400.
Okay.
So you want to kind of avoid that, because there's lenders out there which will charge you risk fees and higher interest rates. So if you can fix your credit and be in the excellent category, you're opening up yourself to a lot better position.
Yeah, we definitely have lenders that we work with that will look after clients that do have lower credit scores or previous defaults and some credit, impairment. But like you said, the rates are higher.
Yeah.
The product, there's not as much choice. So obviously, the higher the better. The credit score, the better. What can somebody do to improve their credit score if they're not happy with where their current credit score is sitting?
Okay, so the first point would be to obviously, upon you looking at the report, to put some kind of strategy in place to increase it steadily. Now, for example, if you don't apply for too many online inquiries, that really shoots down the credit score a lot because it doesn't let the report or the borrower build good credit over time like they would on like a personal loan or a credit card.
I might just stop you there to explain to our audience what that means, online inquiries, because a lot of people we find don't actually realise that they're making finance inquiries. But anytime that you sign something it might be a rent to buy, or it might be a payday lender, or it might even just be a piece of furniture that you're going to, that you have to pay in monthly installments.
Yeah.
People don't realise that these things are actually inquiries on your credit report, and people don't realise that even if you've got excellent repayment history, if you have a number of inquiries within a short period of time, it can actually significantly impact your credit score, can't it?
Absolutely, we see it every day at credit repair solicitors. So people don't realise that they've ticked the box online, and then suddenly when they come to get finance, their report is not in the position they thought it would be.
Yes, and that can also apply for, sometimes we get people coming to us wanting to do pre-approvals with heaps of different lenders. We're like, well, that's actually going to work against you because it's going to really impact your credit score. So, yeah. Absolutely.
So that's why it's obviously the pre-approval is so important, that before they go out there and sign a contract to buy something, they speak to the people on the right side to make sure they're in the best position, because obviously you guys care about the clients and you want to do the best thing for them. So part of that process is to make sure the client's creditworthiness in this optimal position before finance.
So that tip is really to avoid having anyone do an inquiry on your credit report unless necessary, basically.
Absolutely, yes.
And just try and limit that down. Are there any other tips that you can think of that would help to improve someone's credit score?
So what we've seen through this magical algorithm that the credit bureaus have is basically what's called credit utilization. So let's say if you have a $10,000 credit card, but you keep the usage below 70%, so in that example, 7,000 or less, that actually does have a pretty positive effect on the credit report.
Okay. So having a credit card and utilizing it to a maximum of 70% actually improves your credit score.
Correct. Yeah. So it's a small factor, but it is something that does help build good credit over time.
What about for people that have a credit card or get a credit card approved and they never use it? Does that also improve it, or what does that do?
No, not really. So since 2018, with comprehensive credit reporting coming through, if they're not using the product, they're not really allowing for the good credit to be built. So obviously speak to your financial advisor to make sure before you get these financial products, but basically credit cards, home loans are something that allows good credit to be built over time, and the algorithm likes that.
Okay, that's really interesting. So what about people that don't have any credit facilities? So let's say, for example, it's a first home buyer and they've never obviously got a loan, they may not have a credit card, they may, what can they do? Do you suggest that they do get some credit facilities to build up that credit report, or what are your suggestions there? Yeah,
obviously it's not ideal to ever tell someone get a credit card for the sake of it.
We don't normally like to promote credit cards, but it can be okay if you're disciplined with how you use them and you make sure you make the maximum, repayments and pay it all down.
Sure.
So it can be okay, but obviously you need to be really careful because they can also get people in trouble.
Precisely, and that's why before applying for finance, just to check that your credit report, number one, exists if you haven't had any type of finance before, just to see where it's at before you go forward.
Okay, so we've talked about limit your inquiries. We've talked about getting a credit card and utilising it to 70% as things that can improve your credit score. What are some other things that can improve your credit score?
From that point of view, I guess, is sometimes you get people who have bad credit. So to avoid being defaulted by telco companies, or electricity, gas providers, all the way up to making sure that you don't ever default on a financial product like a credit card, because that can really affect one's creditworthiness.
So are you talking about when people miss their repayments or when people miss their monthly expenses?
So if you miss a repayment of, let's say, your home loan, you'll have a negative figure between 1 to 6 that will appear on your credit report. So every 14 days that you're late from the due date, the number increases. And if you've got a lot in a short period of time, that really dramatically affects it.
Okay.
But also speaking about the extreme case of making sure that you don't become defaulted. So having all your finances in order before you step out and buy that next car.
Yeah, and what I would say is that it's really important to get help up front, isn't it? You know, I think if we have people that reach out to us before they get to that point, or when they can see that they're going to start to, money's going to start to become tight, we have a lot more options available to help them.
Yes.
If we deal with it at that point before the missed payments and the defaults start coming through. So I guess my thoughts from a finance perspective, looking at it from how we can help them, would be to speak to someone early and see if you can get some help early before you start missing repayments and making defaults on these facilities, because like you said, it can have a really bad negative long-term effect.
Absolutely. So obviously with the cost of living and high interest rates right now, these things, what we're seeing actually a pattern where people are prioritizing their home loan, naturally, right? But a lot of their credit cards are being paid late. So they could have all the money saved up and they've got equity in their property if they want to refinance, but because of their credit score being low because they've missed repayments, at the end it deems them as a risky borrower, so the prime lenders may not look at them favorably.
Yeah, so that's a really big point, isn't it?
Yes.
Just to make sure that you're keeping on top of your repayments, and like you said, cost of living is hard. There are pressures at the moment, so I guess that's just make sure that you're reaching out for help if you do feel like you're in a situation where money is becoming a bit tight. We're spending a lot of time these days actually sitting down with clients and helping them to understand where their money's going.
Oh, really? Okay.
Looking at their living expenses and helping them to analyse where their money's going and how they can actually make room for some of these expenses. If that is it actually is a really eye-opening process, because let's face it, most Australians actually don't know where their money goes.
Pretty much. Or you see those things from us. I see when it's already damaged, and that's why they come to us to repair it. So
that's right.
We can give it back to you guys and be able to help the client with the loan.
I just want to do a shout out to Nalene, Adrian, Marion, Sam, Susan, Carl. Thanks for joining us, guys. Really appreciate you being online. If you have any questions or comments, pop them in the comments section below and we would be more than happy to answer them. We'll just get back on track. So what we were talking about is ways to improve your credit score. So we've talked about minimising your inquiries. We've talked about having a credit card and utilising it to 70%.
Yes.
We've spoken about trying to avoid going into default or missing your repayments.
Yep.
Is there anything else that can really make a positive difference to your credit score?
Basically, there are each credit bureau, so there's 3 in Australia. So Equifax is the main one, Ilion, and you have Experian. So all those companies, credit bureaus, have different ways that they have their algorithm scoring. Now, Equifax being the main credit bureau within Australia, and I'd say Ilion secondary, they've got their own ways that they look at things. So what we'd also recommend is to actually look at all of your credit reports rather than just
across
one.
all of the organisations.
Correct. So what sometimes happens is there may not be an adverse entry like a default or judgment on the Equifax, but there may be a default on the Ilion.
Right.
So to order all those up front to see where it is probably a smart thing to do.
Yeah, okay, that's a really good point. The other thing that I see sometimes happen, it's not often, but occasionally people will have things on their credit report that they didn't expect. Maybe it's a bit of a surprise. An example that comes to mind is we're doing an application for someone and there was a telco default.
Right.
And it actually related to her son's mobile phone plan.
Okay.
But she had forgotten that she initially took that out in her name.
Right.
but her son was paying for it, so she had forgotten about it, and obviously he stopped paying, and then there was defaults, and
Not good.
bills didn't come. So obviously that was actually on her credit report.
Right.
So sometimes there are surprises that come up on the credit reports that people don't expect or don't remember applying for.
Absolutely.
Or, the other thing I sometimes find is that people move house and they forget they've signed up for something and they stop receiving the bills.
Yeah.
And, do you see these sort of scenarios?
We
and
do.
What can you do about these sort of things?
Okay, so we see things quite often. So what I always say to people is 99% of people pay their bills on time. There's a reason why sometimes they don't, and it could be something very big or dramatic in their life, like heaven forbid, like loss of a job or something like that, or it could be as simply as moving addresses and then not updating your creditors
and not receiving the invoices.
Exactly,
yep.
exactly. So we see that quite often, especially during just after COVID, where people are moving a lot of properties,
Yes.
And moving into new ownership. So what we say is we look at the credit report, and obviously that's where the default would be in that case. We'd then do an upfront analysis at credit repair solicitors to make sure there's grounds for the removal before going forward with that person. So they get the benefit of speaking to a specialist to make sure things can be helped before going forward, because the last thing you want is to promise something to someone and not be able to deliver.
So there is ways of potentially removing some of these things in certain circumstances.
Absolutely. So from a statistics point of view, around about 65% of adverse entries on reports are actually listed in error, because it's a person who initially did the error. Now, the error could be as simple as your name being wrong, or it could be the creditor hasn't followed the what's called the reasonable endeavours to try and contact you,
Yeah.
or in that relation. So
65% of these adverse listings are wrong.
Pretty much, because there's a procedural process, and at the same time, if the debt's been sold to like a debt collector, maybe that formal process hasn't been followed properly. So we use that to the client's advantage to be able to get the default removed off, so they can then go forward with their financial goals.
Yeah, awesome. Do you have some examples or case studies of where it's benefited a client to get their credit report fixed? Because I'm assuming there is a cost and a process to go through in doing this.
Sure.
What sort of examples do you think it's worthwhile pursuing?
So in the event where, firstly, because it's a no obligation upfront analysis, it's just good for the client just to know where
so is that a free analysis?
That's a free analysis.
Okay.
So that we provide. So it could be a telephone call, could be a video call, whatever the client prefers, as we do Australia-wide. So we see things all over the shop. And the main things are, aside from addresses moving or some issue happening, so what we always say is just let us see what can be done. And if it can't be, we let you know. And then obviously there's lenders out there that would welcome someone in your situation.
That's right, and we can find solutions for that.
Absolutely.
But in a lot of cases you can help.
A lot of cases we can. So there's been people where they've come to get a car loan, they found the car that they want, it's assessed the credit report, but then they come back with an issue on there. Let's say, for example, a judgment. If they're like a business owner or something like that, it might be on their commercial credit report. So then we analyse to see if there's grounds for removal. In one case, once we removed the adverse entry, their credit score went up by about 350.
Wow.
Allowing the client to be able to get a lender at a very premium interest rate.
Yeah.
Any money that can be saved these days is very important, I believe.
Yeah. And I guess, open banking's becoming more and more common across the lenders. It would be good to just touch on that briefly and how that is changing the face of credit reporting and credit scoring, because I don't know if many people realise, but with open banking, the banks can see so much more of your history. Previously, credit reporting was quite basic in the sense that they'd only be able to see really serious defaults.
Yes.
But now they can see if you're a little bit late with your repayment, or what are some of the things that have evolved as a result of open banking and how that's impacting credit score?
So it was I think the niche was meant to be called positive credit reporting, but there's pretty much actually nothing positive about it from that point of view. So
well, it's probably positive for people that are always paying everything on time.
That's it. So
it's probably not positive for anyone else.
Pretty much. So what was happening before 2018 is, as you said, Vera, so if you go to one of the big four banks and then you got issues with them and then you go to another one, they wouldn't really know. But now that information is being able to be seen on the report, i.e. like the missed repayments, or if you're a good borrower and you're making repayments on time. The other thing that's come through last year is financial hardship information.
Okay.
So if you enter into a payment plan with after COVID with your let's say your home loan provider, then that information, so if you enter into like a 3-month interest only where there's principal and interest, they'll actually be captured in the separate section under the financial hardship. So when you come to refinance, for example,
they will know that you've had financial hardship.
Exactly right.
Yeah,
so,
that used to be excluded from the credit reports, didn't it?
correct, it wasn't there. So this open banking has just evolved over time.
So I wonder what impact that has on people when they go to do, loan applications. Because obviously, if they've had those financial hardship conversations with their existing lenders, and there's going to be a bit more explaining to do when you're doing a new application to say, well, if you couldn't cope with the repayments back then, what's the difference now?
Absolutely. So what we're seeing is the more touch points a credit report has, the more likely an error has occurred somewhere. So if you've entered into our financial hardship arrangement for 2 months, but it's reflecting 4 months, that might deem you into the risky borrower category. So then that's why we recommend them to speak to professionals like yourselves to make sure that they can provide adequate information and notes to the potential lender that they're looking for to help them explain what happened with that person during that period.
And how late does a home loan repayment have to be before it's captured on the credit report?
There's a grace period around about 13 days.
Right, so if you've made your home loan repayment within 14 days, you should be okay. But if it's any later than that, it will show. Is that what you're saying?
Correct. But ideally, you want to be able to even make the repayment even 1 day before the due date. That is another thing that we've seen affects the credit report rather than leaving it onto the due date.
Okay.
So
if you make the repayment a day before the due date, that improves your credit score.
Over time, yes. For the algorithm likes it basically. So
wow.
Yeah, it's an interesting thing, and this is all patterns that we've seen over time.
I like how you describe it as the magic algorithm, because no one really knows what the algorithm is.
Not.
It's just this magic number that's pulled out of the air. And most lenders now are, before the loan application of the applicant goes through to a credit assessor or goes through to a person to assess, it really goes through a computer.
Yes.
And the computer decides based on credit score whether the loan will be declined, forwarded or approved. So credit score is becoming so important.
Yeah, as we say, the computer says no sometimes, and then that's why the old school manually way of doing things is now jeopardizing clients, because the lender doesn't see them like that anymore, and that's why it's important to speak to a mortgage broker to be able to help them before they go forward.
Absolutely. We've got a common practice now that every applicant, we will always do a comprehensive credit report for them before we do an application, and we find that's just works so much better because we can actually go through everything. There's no surprises from the lender's side. We know what we're dealing with. If there are any unexpected items on the credit report, we can deal with them before we lodge an application so that it's not going to impact their credit score moving forward.
Sure.
Yeah. So, look, that's been really, really helpful. Are there any other updates that we need to be aware of credit reporting or scoring?
No, that's mainly the main items that have come through. The last thing is something called Equifax One Score. So it's another way of a scoring method that Equifax uses. That's why it is important that before you buy that car, home or refinance, to make sure that the credit report that's being used is the one that the lenders do use. So there's no issue coming up. Life's busy enough, we have enough challenges. The last thing you want to do is sign a contract that's unconditional at an auction and then realize you've got an issue on there. So really recommend not doing too many volume of credit inquiries, avoiding online, but also looking at your comprehensive credit report rather than the free credit reports out there.
Yeah. So I guess that brings me to my final question. What can people do if they want to get a copy of their credit report? Obviously, I did mention earlier that we can provide a free copy of your comprehensive credit report to you if you would like to come to one of the Rise High mortgage brokers. They can help you out with that. What are some other ways that people can access their comprehensive credit report if they want to do that?
Sure. So they can go to equifax.com.au and follow the tabs to obtain the credit report, and that way they might be able to also set up alerts. So in the world where a lot of fraudulent activities are happening, it'll send them an alert if they register with Equifax. So every time there's an inquiry made or something happens, you'll know. So you'll be able to stay on top of it.
Is that free to set up for that?
No, it's not free. So I think they charge some kind of monthly subscription for that.
Fee, yeah.
For the first 6 months when the Optus breach happened, it was provided by the government for free.
Okay.
But now it is a cost from the credit bureaus.
Yeah, but with all the cybersecurity stuff happening out there and all the identity theft and everything that's happening, maybe it's worth the investment.
Absolutely, because I think the cost is pretty small, but compared to the damage that could be done out there, and if you're not one to look at your credit report every 6 months, then something could happen 2 years ago and you have no knowledge of it.
So would this then alert you every time an inquiry is made on your credit report if you sign up for this?
Yes,
Yeah.
it would.
And so this is obviously with Equifax. You did mention there was 2 other credit bureaus. Do you also need to set up alerts with them as well, or is it sufficient just to have it with Equifax?
I think it's sufficient to have it with Equifax. At the same time, if your goal is, let's say in the next 6 months you want to buy a house or consolidate debt, then maybe it's wise to also look at your Ilion credit report and then just keep your eye on both going forward. So that way it minimises any issues coming up and more likely that your loan will be accepted the first time around.
Yeah. We also, when we had all that thing with Optus breach and all the stuff that's happened since, a lot of people were wanting to pause their credit report so that no inquiries could be made.
Yes.
So that's also an option as well. You can also put a stop to any future inquiries, but that's a very short, limited time frame that you can do that, isn't it? So what's your advice around that?
My advice would be similar to if you lose your credit card, you jump onto your internet banking and you block your card until you find it or speak to the financial institution. Very similar in this regard. So if you smell something's going wrong, you've got a feeling, then put a stop to it. But at the same time, maybe activate it whenever you're ready, sooner rather than later, to allow that good credit to start being built again.
If you do sign up for that Equifax alert system, and then you do get an alert saying, so like this company has just submitted an inquiry on your report, and it wasn't something that you initiated, what can you do in that situation?
So in a scenario where, let's say you know that there's something wrong with your credit report, a lot of people will quickly speak to the credit bureaus, but what people have to understand is the credit bureau is just a bureau of information. They are not decision makers. So if you realize there's an issue with a particular creditor, our recommendation is that you contact that creditor straight away and start speaking to them directly, first-hand information, rather than waiting and submitting up.
I think we've shared so much great information today, so thank you so much for your time, Pasha. Was there anything else that you wanted to mention before we wrap it up?
Just wanted to basically say, make sure that you speak to the team at Rise High before you apply for finance. Doesn't matter what it is, guys. If there is an issue on there, they'll be able to tell you straight away. So then they can be contacting us to make sure we fix your credit and make you loan ready. So then Rise High can move forward and assist you. So defaults, judgments, late repayment history, too many inquiries. Think of us in that regards. At the same time, lean on your professionals to be able to guide you through the journey.
Thank you, Pasha. We love to help people, so definitely that was a great summary. And yeah, so if you want to learn any more about this topic, have any questions, please don't hesitate to come to us and ask. That's what we're here for. Thank you so much for joining us today, and thanks to Pasha for joining us today. That was really insightful. Lots of great information and tips for our listeners. So we'll see you again next time. Thanks and have a great day. Bye.